Okay, good afternoon. So we're last panel of the day, so we'll keep it lively, and I suspect everyone's thinking about drinks, but we will no doubt have a lot to talk about in the next 40 minutes. So just to start, I think to set the scene, the last decade and the first phase of the energy transition focused on the development of energy generation. And we've done well. We're now, ChatGPT tells me, at 32% of electricity generation comes from renewable sources. So we've still got a lot more to do, though, is the main point as well. When we look at the next phase, whilst the last phase has been complex, the next phase is even more complex as we look at the decarbonisation of heat, very hard to abate sectors such as industrial heat decarbonisation, the electrification of transport, and in doing all of this, we have to change consumer demand, we need to change grid structuring, we need to change ultimately investment into electrification, and that's all in the backdrop, as we've heard about, with the increase in AI, the gap for data center demand, and where we're going to fill that, and ultimately how we ensure the security of energy supply as well. And so with that, I'd like to turn to the panelists. If you could each introduce yourselves, that will be fantastic. And then we can head into a live discussion about where investor focus is and what we think the challenges in the next decade to come will be. Over to you.
Thank you. Giovanni Terranova, I'm one of the founders and managing partner of Bluefield. Bluefield is a fund manager, but also operator of renewable energy. So we are a developer, operator, asset manager, and therefore we operate all over the value chain. We have around 2.4 billion of assets under management. We operate in the UK and Europe. Predominantly in the last few years, it's been UK, Italy. We've done some Netherlands as well. And in terms of my background, I've been I'm a power engineer, MBA in finance. I've been working 25 years in energy, debt for a short period, a long time in equity.
James Innes. ELMYA Energy. Thank you. ELMYA Energy is a developer of renewable assets, solar, PV, and now into wind as well. It's a Spanish company based in Seville, and traditionally it was a high voltage, medium voltage installation company. It's evolved into an EPC, where the bulk of its business comes now, of the construction of assets, and also the operation of assets. My responsibility is for the development here in the UK.
Fantastic, Nicholas.
Nicholas Wrigley. I'm the owner of something called Novalight Capital. It's had different names over the years. Winch Energy was its predecessor, which got sold. So we reinvented ourselves. We're basically greenfield developers, wind, solar, battery. We tried a bit of hydrogen. That didn't go too well. And very much all over the world in the last 20 years. I mean, literally China, Philippines, Vietnam, Indonesia, and it's wind and solar, but more recently solar in actually the southwest of England, small projects under 5 megawatts. That's the advantage of being a small developer. And the Balkans, which is wind, solar, and battery.
Fantastic, thank you. And I actually forgot to introduce myself. I'm Sarah Strachan. I'm a senior investment manager within the Octopus Energy Transition team. So we focus on those hard-to-abate sectors, being the decarbonisation of heat, decarbonisation of transport, e-fuels, long-duration storage, and we sit alongside our renewable energy generation funds, so cover across the kind of full spectrum of infrastructure investment within the energy transition. With that, I think perhaps we can start more broadly and touch on your views across the panel. When we look at the next 10 years, where do you think investors are underestimating or underestimating the challenges, and where do you think attention should be focused on in the next decade?
Okay, thank you. Certainly we are, and you touch upon, but I think we are in a huge revolution that is going beyond even the energy transition, because we are, and it has been talked very much on papers as well, but is this transition from fossil fuel-based state and geopolitics into electrification. And then you've seen many times the reference from the petrostate to electrostate, and China has been seen as one of the countries which has been moving quickly and first into this electrostate kind of position. And I believe in the next 10 years, the two energy crises that we have seen, they will push this move towards the electrostate, so electrification of the majority of energy uses even more. If we look back at the 70s, when there were the two crises, it was the second crisis which was pushing very much the reduction of use of oil in power generation, for instance, and triggered all the wave of investments. At that time, it was nuclear and the beginning of the renewable energy in terms of research, in research, basically. If we look at this transition, we look at what is left in Europe, for instance. I was looking at some Eurostat data. The gas that is used in Europe is used 40% in building, 30% in industrial uses, and 25%, so 95% of it is industrial in power generation. And if we want to move, and there is a political decision to move into electrostate, because this is means energy security. It means electrifying the transport, the industries, the heavy users, means relying less on gas. This means that there will be a lot of investment in that area, exactly in the area where you are working, and renewables will continue definitely being a driver. This electrostate revolution is driven by solar and batteries predominantly, because they are cheap, easy to install, so they are really they will continue. So certainly next 10 years we'll continue to see investment in renewable energy, but in more sophisticated way, a lot of flexibility, grid infrastructure, EV charging, and a lot of electrification of industrial uses. So I think in this picture there will be also room, particularly in certain countries, for nuclear. Nuclear in the US for sure, China as well. They are betting on it. Europe, as usual, is undecided. Is probably going towards being or want to be or would like to be an electro kind of continent, and therefore will do and look at nuclear, but it's the one which is a bit more slightly behind the others. So this definitely will be the main items, the main investment themes in the next 10 years. So flexibility, grid, renewables, nuclear, and industrial investment in industrial electrification for heat and for heavy energy use.
Yeah, and I think it's interesting that you talk about China, because they definitely have set the pace in a lot of ways. I mean, they now, you would argue, literally own 100% of solar panel supply. And are leading the way in long-duration energy storage and a number of other areas. So I think it's interesting to see what's happening in China and how that will drive the trajectory of where we're going. But over to you, James.
Yeah, I generally agree with what Giovanni has said. From a UK-specific market, the greenfield development side of things has pretty much reached its peak for now. Because now it's a concentration of delivery of what the government has set of 250 gigawatts by 2035. And so it's all about building. It's building the new grid, it's building the assets to be able to meet their targets. The government hasn't been too transparent in terms of how they have calculated their need in terms of the energy transition, because a lot of people estimate that the 250 won't even cover particularly the advent of data centers. So the investment in the grid is key to be able to complete this conversion. and there's an awful lot of grid that has to be built. I mean, we're talking about a wholesale change, brand new grid across the UK.
And I think we'll come on to it in a little bit when we talk about the bottlenecks of
exactly.
development. Lastly, Nicholas, any views?
Yeah,
No one's mentioned hydrogen yet. So.
Well, we don't talk about hydrogen. It's been an unmitigated disaster. But it's a good example of how things can go quite wrong and why developers are becoming increasingly shy of investing very expensive money. The development stuff is the most expensive capital and the hardest to find in projects which don't have a certain degree of certainty. I'd like to go back a little bit and just sort of set the scene. I mean, we're in this perfect storm, and it's a different intensity depending where you are, in particular in Europe. You focus on Europe. Probably the biggest storm is in this country, because you've got a whole series of factors which are coming together, unrelated quite often, right? So we've got the conversion to net zero. That's great. I'm fully supportive. I've been in renewables probably longer than anybody here. But what we've lived off in the last 20 years, I did check the data for the UK, and this is quite typical of a modern European country, is that we've used year to year 3% less energy per year. Right, and that's deindustrialization, et cetera, et cetera. So that means that in 2004 was the peak demand for electricity in this country overall, and it's dropped 25% in 20 years. The forecast going forward from this year is that we will need to double the capacity by 2035. And I would say that's very good news for investors, and that's very bad news for consumers. There's only one way the power price is going, and I think one of the most disingenuous, if you like, stories told by politicians of all parties is that we're going to bring your bills down. That's never going to happen, or we won't be able to deliver the power. And I think you mentioned data centers. That's just thrown another big axe into the mix, where no one had really anticipated the huge demand for AI and therefore the infrastructure behind it. I mean, we talk about superscalers, or whatever they call, hyperscalers. Well, these consume the same power as Milton Keynes, right? And we can't even power 1.5 million houses, which is on the list to be built. So, I think something's going to get. Now, where's the investment going to go? It's going to go, I hope, in transmission. Our transmission system was built in the 1950s, 60s, and 70s. It was built for 500 power stations. Today, we've got 2,500 power stations, many of which are tiny, renewable, intermittent power. Tomorrow, if the government follows through on its promises, we're going to triplicate the number of power stations. We don't have the wires, basically. It's as simple as that. And our last point, we have a particular challenge in the UK, because in other countries, the transmission, the wires are owned by the governments, or at least the governments have significant influence in what happens in those companies. Why is that important? Because if you ask the national grid to invest 35 billion, it will basically say, oh, that's great, give me the 35 billion and I'll do it. Whereas EDF, right, which is the other scale, is basically government owned. And if EDF gets told to build out the grid, EDF will build out the grid. And I think that's the major constraint, and we'll come on to it in a minute, of the UK. Anyway,
but am I correct in saying that National Grid have recently announced that they are investing 35 billion in...
But where's the money coming from?
Yeah, true. Well...
From us.
And I guess we don't want to talk about it on this panel because for a number of reasons, but when we come to the decoupling of gas and power prices and what that can do as well. So anyway, I think there are a number of challenges here. Again, no one's mentioned hydrogen, but we'll come on to that in a second. There are a number of challenges. In the last decade, we focused predominantly on single assets or kind of homogeneous assets that have been, in some cases, consolidated, and that's where the development of renewable energy generation has focused. Giovanni, do you see more diverse platforms or more kind of complex investment strategies when we're starting to look at the second stage of the energy transition, particularly because this is going to be harder, and therefore, how are we going to be deploying capital where you need greater returns? We've touched on development risk and the fact that construction risk, development risk, a lot of technology risk exists as well, and how do we tackle these challenges amidst rising interest rates where you're looking for greater returns?
You touched on an important point, which is the backdrop in terms of interest rates. If we look back 25 years ago, very early on in terms of early days of infrastructure investment, the investment was mostly into companies and platform in a form of a private equity style. There was not such a thing of investing in single assets, really. This trend came indeed particularly initially with the PPPs, specifically only to UK, but in wider kind of European market, the investment into single assets came with the renewable energy because of the distributed nature, because of the kind of the incentive regulatory framework was helping to build up small assets and the low interest rates. So that was the period, let's say 2007, 2008, and so on, where specialist manager like we are, for instance, when we started doing this, we started to build up asset portfolios with the aim of delivering yield, the kind of single-digit yield in a very low interest environment. And that has been the trend until kind of the moment in which the interest rate started to go up. And at that point in time, we came back to the platform investments because of the need of getting double digit. Then the point you raised, indeed, whether it will be pure play or kind of a more diversified platforms. I think the direction will be more diversified platform for the reason that the market is becoming more complex. You cannot rely only on solar only, wind only, biomass only, or biogas only. It is a kind of the platforms and will need to adapt themselves to the market needs. So will be more diversified platforms. Still in the fundraising market and the investor market, the specialism will be, I think, and I'm saying that because we are specialists, but also because I believe that the specialists can still deliver the alpha in the investments. So there will be specialist diversified platforms that will be that has a sort of a trend of the next few years, with the search of double-digit returns. And that we have to keep in mind that the backdrop has radically changed from when the pure play single asset portfolios started. Really now the cost of debt, the cost of equity is as such that the investors are looking for double-digit returns, and this can be delivered by specialist diversified platforms.
I think it's very interesting. London Climate Action Week is upon us in a couple of weeks' time. Last year, I saw some stats showing that generalist investors were moving out of the energy transition, but specialists were moving further in. And I think it's exactly that. You need to be bringing something else, an understanding of the technologies. You're increasingly seeing the combination. You kind of touched on battery, solar, co-location is now a general point where you're seeing EV transport alongside BESS. And I think we haven't yet spoken about energy trading and the fact that these energy management systems are fundamental to grid infrastructure, security of supply, etc. So
complexities. The complexity of the investment into energy transition is completely another scale. But it's a sign of maturity. I mean, it's the maturity of the sector. 15, 20 years have passed from the first phase, and now the complexity is triggering the need of having experienced managers and to build platforms or portfolios that are properly diversified and fit for the market, for what are the needs of the market.
Which I guess is a positive because, you know, all of us, especially you've mentioned you've worked in renewable energy probably before anyone. We want to see the positives for our planet, if nothing else. So with that, James, where do you see the bottlenecks, because there are bottlenecks. There are things that are slowing development. There's a lot of capital. But how do we push that forward into the market?
Yeah, I mean, by far the biggest bottleneck, well, it used to be 10, 15 years ago, planning was your bottleneck. But now that's taken second place to the problems with the grid. If you ask for, well, we had 7 gigawatts in development before CP 2030, 14 projects, 7 gigawatts, and after CP 2030 we ended up with 1. Only one of them getting Gate 2, and now we have to battle through the second round of Gate 2, possibly, maybe getting. And then you've got the spatial strategy that the government is going to bring out in 2028, which will tell you what technology they want in what region, and there's 11 different regions. So you may, like ourselves, you'll have planning consent for 3 very large battery projects with no grid, but we don't know if that will fit in within the spatial strategy, depending on what the supply and demand is. The other problem is that the Gate 2s that are coming out, I mean, they've done the phase 1 Gate 2s up to 2028. They will start with the 28, 29, 30, October, September time. They're very woolly, the offers. They're full of caveats. This brings a fundamental problem of securities and finance, because we think there's going to be a very large attrition in the Gate 2 process, because a lot of the developers simply can't afford the securities if they're very far out. Everybody pre-2030 is probably going to do okay, but if your project ends up being 31, 32, 33, you've got a big problem, because you're going to have to put up a lot of money in securities to be able to then hang on there, and only the big boys will be able to do that. Secondly, there's a lot of reform. There's reform in grid, there's reform in planning, there's reform in the feed-in tariff, there's reform all over the place. It makes it a very insecure climate for investors to bet on what it is they're going to get. I mean, we've heard all day about what's your exit strategy. And investors 5 years ago came into this because they thought they were going to be able to exit with double digits under 10 years. That's no longer the case, except for the projects that are pre-2028. So, yeah, grid, planning, finance.
And I think, on the regulation point, that's really interesting, particularly around grid, because we all know that there's a number of projects waiting in the queue, and a new project today will get grid in 2036 or something like that.
Yes.
So, which just sets the value for that project at 0.
Yeah.
Other than government engagement, should we call it, what other solutions do you see?
Well, investors like, honest, open, transparent targets, because you'll have investors that want exit early and investors that don't mind waiting till 2033 if they know that there's a plan, where they can exit and they've got a solid amount of information. The problem right now is that the investors that originally invested in renewable energy have been burnt. So how do you gain that confidence back? You can only do it, and I had a meeting with Desnes precisely because they were asking, where have all the investors gone? He says, well, because basically you've muddied the waters, you've scared them off, and if you want them back, you're going to have to be a lot more transparent on what it is you're doing.
Yeah, I've mentioned hydrogen a couple of times, but if you look at HAR1, for example, there are a lot of projects waiting for HAR3, and they've been waiting a significant amount of time, and that hasn't come. But I think that's a very neat segue. Nicholas, there's obviously uncertainty in the UK. Where do you see, or kind of what other, call it geographies or regions, do you see attractive returns and less uncertainty?
So where you've got greater certainty, which is just a bit positive, where you've got greater certainty is where the governments are driving policy, strategy, and investment. Okay, so there's a reason why all the electricity, the majority part of the electricity we've all used up to date has been typically delivered by something which a government built. There's a reason for that. Is because it's so strategically important that sometimes you can't leave everything to the private sector. You can leave the private sector to fill the gaps, maybe to do the renewables, but the backbone, and I'll probably get evicted from this conference, but the backbone, in my view, has to be built by government. And we're at such a transition point, and as I say, the UK is by far the best or worst example, depending on which angle you take, that it's not fiddling at the edges which is going to solve the problem. I mean, we have shut down, I think it's 500 coal-fired power stations. Absolutely right thing to do. But we've not replaced them, right? We've replaced them with standby gas. And I was looking at some prices the other day. At peak times, we're paying something like £2,500 a megawatt hour, right, for peak gas. Now, that's the price of going into intermittent wind and solar, right? Is that when you need the gas, you've got to turn it on, and the guys can charge what they like effectively for it. And I think, I can't see how something which is so critical to the economy, to agriculture, to everything that we need, I can't see it being delivered without significant government intervention, investment. And, right now we seem to be ignoring. I've done a lot of stuff in the UK. I've lost a lot of money in the UK. Luckily made money elsewhere. Italy made a lot of money because there's more direction, there's more strategy, there's more investment, there's more direction. Where you leave it to the private sector, you end up in a mess sometimes. And we're in a mess. Sorry to be negative.
No.
Mess gives opportunities.
I think, we need to be realistic as well. If you look at long duration is somewhere where we focus, and I think it's probably a hot topic at the moment for a lot of investors. The cap and floor is kind of yet to be announced, but you're seeing the Italian subsidies, for example, clear direction, clear focus, and ultimately a lot of deployment then being generated from them. But that's clearly the first challenge. What other challenges do you see in the next few years?
Yeah, I would say that, as you mentioned, and it's worth looking more in detail to that, the first phase of the energy transition has been driven by decarbonisation, and it was done in these 15 years, has been driven by decarbonisation, and it was mostly power. Easy peasy. It's been nice ride, clear direction, good return for investors, because, the one that invested, they got a good return in the last 15 years, investing in the first wave of ROCs, feed-in tariff, and so on. That has been really a good one. Now we move to the second phase, much more complex. Why? Because indeed, looking even at the power generation, we reached, I think you got from ChatGPT 32% globally, because I got from ChatGPT 50% of European Union, last year 2025, but it's European Union only, in terms of electricity, which tells basically that a big and good job has been done. And now, if you want to move further up and you get to 75, 80, 90%, I was at a conference actually with Italian national grid, and the guys there were saying that until you get to 70, 75, the cost is very, very manageable. As soon as you get beyond 80% of renewables into the network, the cost for the system will go exponential, literally with an exponential figure. And therefore, what they were, this kind of described the complexity of the transition into full renewable, because realistically we can get to 80, 85, and then we will need still to have this 15% which will be covered by most likely gas or maybe nuclear, which is very inflexible, so it's quite difficult to cover. So what are the challenges there? certainly with the success of renewable energy, solar and wind, we know, and obviously we come from the sector, for us it's quite known, but for the others that are not from the sector, the success of solar has meant that kind of the number of plants that produce at the same time when there is a sun shining is as such that the energy produced is more than the one that is demanded at that period of time, for two reasons. Physical reasons, because the generation is located, for instance, in a country like Italy, is the south, and the demand is the north. UK, the wind is in the north, the demand is in the south. So there is a physical constraint, and there is an inflexibility of the demand, because when solar is generating peak hour, 12 p.m., 1 p.m., and so on, it is producing at the peak. The demand is not enough. Or better, there is no mechanism of flexibility that allows the demand to go up or to go down when the price of electricity is very high in the evening or when it's 2,500. So the bottlenecks are investments in the grid, investment in flexibility, investment in digitalization, but also policy. I mean, policy and regulatory framework, as you said, in a way, that is in very important direction. A clear regulatory and policy direction that understands the new way the kind of the energy market works, and the need of having and allowing systems and regulatory framework that help the flexibility of demand, the digitalization, to make even the users, I mean, we as a residential user, to be able to import and export, use our balcony solar or our rooftop solar to export and become either an exporter when it's needed or kind of an importer of electricity. All of these are so basically the big bottleneck is grid investments, physical grid investment and flexibility, but also policy or better governments that have a clear understanding of how the system works and what is needed to make the second phase easier or make it less costly.
And I think for me, the big one to add to that as well is storage, because
flexibility.
Exactly. And I think the challenge has always been, or in the last, call it 6-7 years, the concept of the decarbonisation of the home, vehicle to grid, these concepts have all been bubbling about. But it's really now about how do you implement that and where are we seeing that going forward, which I guess, Nicholas, comes to the question, we're seeing platform strategies rather than individual projects. But what characteristics do you see with scalable platforms versus simply a collection of assets? And how is it diversified?
I mean, platforms, by that I think you mean development platforms, where you have, teams of people who go out, identify pieces of land, get permits, get grid connections, and then try and flog them to Giovanni's colleagues. They're a increasingly rare commodity because, and certainly in the UK, where I think it's very challenging, because the biggest enemy of developers is time, right? Because if you don't get a project, if I can't sell the project to Giovanni, it means that I'm still paying all my team. You tend to need pretty clever and expensive people. It's complicated stuff, and there's regulatory, there's engineering, there's a whole bunch of stuff, and very much the life and death of a developer is based on being able to sell that particular project in any given year. So if you're then told, oh, by the way, your grid connection is in 5 years' time, that's the death of developers and therefore platforms, right? And in fact, the UK at the moment is suffering a tragic loss of platforms. Some of the big platforms have either shut down or have gone bankrupt, basically. Without going into detail. Now, why would you want to have a platform? Well, because the whole life blood of a developer is to continue to develop new projects. So what's your most important asset in a platform? Your people, Right? Your people are the most important things. The difference between a good and bad developer is the difference between survival and thriving, essentially. And, you know, if you get a good team of people, they can manage an increasing amount of projects, therefore potentially increasing amount of revenue, and lower the unit cost, essentially. And I mean, I think the challenge right now is to follow a lot of our investors. You know, investors today very much view power markets as transnational, right? So if it doesn't work in the UK for them, they'll go to France or Italy, or increase. You know, for example, now I mentioned the Balkans. You know, Croatia, Serbia, to be Bosnia, Montenegro. There's a whole bunch of new markets opening up where actually there's more certainty and the power prices are higher than they are. There's less sort of government influence. It's more of an open market. You know, and for me, investing in the EU, you know, the EU, you can be very critical of them, but they've done one incredible thing on the power side, is they've linked every single 27 countries to the same power grid. That means you can be sitting in Serbia. Serbia's not part of the EU, so that's not right, but Serbia is connected to it. Croatia, and you can sell power to Italy. Right, or you can sell power to, actually, as they do, to Luxembourg, right? And it's all sort of goes through. So, but without that, it's challenging in places like the UK. But we definitely need to find a way, and Giovanni's guys need to find a way of finding a budget to support developers, because without developers, we haven't got any projects.
Exactly, which I guess is a very neat segue into, James, we've touched on, and when we had our briefing session, we spoke a lot about, and Giovanni's touched on as well, we're in an environment where interest rates are increasing. Yep. Everything's moving to the right, business plans are moving to the right, and we're increasingly needing to try and find, we've got margin compression. How do we manage the gap between investor expectations and the reality of what some of these types of assets are providing?
Yes, I mean, 10, 15 years ago, it was not uncommon for renewable projects to give you a pretty high double-digit, 20% or so. Now, a solar-only project, I mean, you're lucky if you're in the high single digits. It's not very attractive. Having said that, though, the transparency and the projection and the information, for investors to stick it out, because things are definitely going to change. I mean, most people that I speak to in the industry thinks that the UK is vastly underestimating what it's going to need in the future. So there is more aggressive investors that are willing to hedge their bets. And I know, without mentioning any names, large companies that are still land banking because they think they're going to need large solar. But this is the unfortunate thing, is that in order to be able to cover your costs and to get a decent return, it's scalability. So you're going to have big projects in order to be able to, get the returns you want. Smaller projects, unless they've got dirt cheap connections with the DNOs, just don't make any money. They're not attractive. So most people are going for the very big projects.
Just to add something, I think you mentioned indeed, and the focus has been on development. Obviously, again, with the maturity of the sector, you can still, just to say something also positive in terms of, you can achieve strong returns, but working hard, not only on the development, where there are kind of less opportunity at the moment, but also working hard on your existing assets, because you touched upon, if you have a team, a platform that is able to work on the entire value chain, and you can sweat the assets and start introducing hybridization, which we have done in the UK, which we are doing in Italy, not only starting to look at this entire new wave of revamping and repowering, because there are assets, particularly in Europe, Germany, Italy, France, Spain, and also UK, that are more than 10 years old, 15 years old. All technology, you can, and actually we have done a lot of revamping and repowering in the UK for wind and in Italy for solar, and the return are nice, and double digit actually. And so there are areas where still there is very attractive opportunity to do double-digit returns. It's just, again, you need a specialist, you need to work harder than it was before.
Yeah, I think that's definitely a theme. And also, James, as you touched on, you're seeing consolidation. And so those larger sites are fundamental, which is ultimately economies of scale, right? And tying in where you've got larger sites, you've got specialists who understand how to manage those assets and maximize return. I'm conscious people are probably at drinks or wanting to go to drinks. And so with one final question, I guess, where do you see the opportunities in the next 5 years? What kind of gets you out of bed in the morning? Where should we be looking?
I touched one in terms of area of excitement in the next 5 years. I think revamping and repowering is a really good area, investment area in all of Europe, as I mentioned. There are more than 30 gigawatts of old assets that will be subject as a target of revamping and repowering, which means that in cases of wind, you can double or triple the capacity. In solar, you can increase up to 50%. So it's a great way of not using additional land, use existing sites, in wind the best sites. So revamping and repowering, very, very, very exciting opportunity. And we talked about grid. We talked about grid of investments, which are more kind of a need, and they will be quite exciting to. But not only the batteries, but will be also grid support technologies like capacitors, flywheels, with voltage control.
Synchronous condensers.
Synchronous condensers, exactly.
Yeah, I think there's a particular opportunity on private wire, maybe, because there's so much new grid that has to be built and so many ICPs that are going to be created that private wire, private substations, you know, potentially there's a lot of opportunity there to be able to, okay, you can't build it in time, but I can. And then, okay, if I build it, but the licensing and regulation has to change to be able to accommodate that. And the government is, to be fair, looking at it, but they need to be a lot more faster in order for us to be able to take advantage of that.
Speed.
Yeah.
It all depends how big your business is and how many people you employ. We employ very few people, so we can make actually quite a lot of money out of the smaller projects. So we go for small, easy, quick, and replicate as much as we can. We have a particular proximity in the UK to the farming world for a whole bunch of reasons which I won't bore you with. And of course, farmers are under a lot of pressure, as everybody knows, with things like inheritance tax and so forth. And to go to them and ask them for 30 acres is one opportunity. To go and ask them for 300 acres is another. So, you've got to be able to find the sites, and it's a lot easier to find the smaller sites. Then the other thing I like is the frontier, what I call the frontier markets, where there's not many of our competitors, which is, I mentioned three. Bosnia is the last one, where we have about 1.1 gigawatts of wind and solar. I think our speciality is around dealing with new markets where, certain things haven't become a commodity. There's no commodity, power purchase agreement. There's no commodity transmission, and we front all that and make all that up as we go along. So I think when it becomes a commodity, it's less interesting to us. And I think the UK is probably a commodity. Good market, but a commodity.
Yeah, exactly. But still opportunities as you've just got to think out the box. So with that, thank you very much. We look forward to the next 10 years.
Thank you.
Thank you.